lighting people, it turns out that our lighting industry crystal ball isn't as accurate as we originally hoped it would be. So as we look ahead into the remainder of 2022, we've connected with an actual highly qualified economist whose full-time job is to evaluate, assess, and analyze various factors of the US construction economy, an economy that's often correlated and closely interlaced with the lighting industry. So we're pleased to be joined today by Richard Branch, the chief economist for Dodge Data and Analytics, the leading provider of analytics and other IT solutions for the North American construction industry. Richard, hello, and thank you for joining us today for 5 big questions.
Thanks for having me back. I'm really excited to be here again.
You know, you're right. You are the first-time guest that's been invited back for a second time. So really pleased with that. Your 2021 economy podcast / video interview was really popular. So we thought we'd invite you back as we look ahead to 2022. There's so many things happening, Richard, that weren't happening a year ago with all the supply chain and logistics shortages, but COVID's still around, and we now have worker shortages that are a big part of the construction economy. When you look at all those factors on top of inflation, which one of those factors are the most impactful, in your opinion, in the year ahead?
That is a daunting list when you itemize it that way. And I think as I look at it, it's really hard to isolate and say, this is the one key thing that is most concerning to me, because at the end of the day, they all concern me in some way, shape, or form. If we just go through the list, worker shortages have plagued the sector for some time. This is a systemic issue that goes back prior to the pandemic, and it will persist in the years to come. Now, as the Omicron fades and new variants come along, we should expect to see schools normalize, and we should expect to see daycares normalize and whatnot. That'll help the construction sector at the margin. But at the end of the day, that acute shortage of skilled labor isn't going away anytime soon. That's an industry-wide issue we need to address. Material prices and inflation, I think that's probably going to cause the most short-term disruption. I say short-term because I think we're starting to see maybe just a little bit of a peak of a light at the end of the tunnel. If you look at factory output in the United States, it's very slowly getting back to where it was prior to the pandemic. So that's certainly a good thing. That should help prices stabilize as long as we continue to see improvements on the logistics side and backup supports and whatnot. I do think, though, we need to keep an eye on APAC nations in terms of how they respond to not just Omicron, but future variants. They've been much more stringent about imposing lockdowns in their economies as COVID cases break out, which of course could certainly affect imports into the United States. If there's a shortage of imports, that'll keep upward pressure on prices. But again, as long as that trend continues in terms of factory output, I think we'll start to see improvements there. And then inflation, though, in general, just outside of the construction sector, that has certainly put the poker to the Fed, as it were, and they'll probably start raising rates as early as April or May. Probably likely to see 3 to 4 rate increases through the course of 2022. When we look at it over a historical period, interest rates, even with those 4 increases, will be historically very low. But as rates move up throughout the year, we're going to see borrowing rates increases. We're going to see mortgage rates increase. And of course, at the margin, that will start to dampen some construction activity.
Yeah, that's another eye-opening wake-up call as well. You look at, $80 million projects turning into $94 million projects because of materials and worker shortages, and now you add on top of that the cost of money possibly being impacted and raising things as well. So when we look at things, and it's always hard to look ahead and predict what's going to happen in the year ahead, but it feels like that during these pandemic times, for the reasons we just discussed, even more uncertainty exists now than ever. So what do you look at? You're an economist. So what economic factors are you looking at throughout the year to determine what the impact is on our industry?
Yeah, this kind of in a way feels like we're juggling a bit, right? And we've got to keep our eye on all these balls as they're in the air, whether it's COVID or material prices or fiscal policy or what have you. I think at the top of my list, it cycles back to COVID. At the end of the day, the pandemic has and will continue to drive the bus on the path of recovery here. That's not going to change this year. So we'll be keeping our eye on whether our assumption that each subsequent wave of COVID infections is less damaging to the economy than the previous wave. So we'll be keeping an eye on infection rates, hospitalization rates, and of course, unfortunately, deaths due to COVID to see whether that assumption pans out. Then, of course, we cycle back to the material price issue, and will we see those trends in factory output and improvements at ports? If we continue to see that trend moving forward, that tells us that our forecast and that our expectations for a modest rise in construction activity in 2022, whether that expectation is going to pan out.
So when we look at building types or certain vertical markets, which verticals do you think could be the bright spots for the year ahead, and which ones may struggle more than usual?
Sure. Well, I think when we think about the positive sectors, it's going to be kind of like a wash, rinse, repeat. And we look back at 2021 in terms of what drove activity then. It was multifamily construction, it was warehousing activity, it was manufacturing and healthcare. We're likely to see gains in all those again in 2022. They will remain strong sectors. I think of all of those, multifamily will slow quite a bit from the robust level of activity we saw last year, but should still move forward. Warehousing, obviously the demand for e-commerce is going to keep that sector moving forward. If there's been one positive aspect of the supply chain issues, it has been for the manufacturing sector, and we're seeing a lot of plant announcements. Just this morning, Intel announced a $20 billion investment in new plants in the Ohio area. So we're seeing a lot more of those kinds of projects come into the early stages of our planning database. That doesn't help the short-term supply issue, but it will help over the long term, and it's certainly great news for the construction sector. Healthcare, of course, healthcare has been a boom industry, whether it's because of research or whether it's because of just demand for more services. That will continue to move forward. Now, beyond that, as long as we continue to see improvements in material prices and our COVID assumptions pan out as we would expect, I also think we're going to start to see the seedlings of recovery in the office sector, in the hotel sector, and education as well. I'll add, though, that even as we start to see that recovery occur in those sectors, that the overall levels of activity will most likely for those three remain below where they were prior to the pandemic, because at the end of the day, we're still seeing reduced demand for office and hotel especially, but I do think we'll start to see those improve slightly in this year.
If it's a recovery, even if it's a slow recovery, it's better than a decline. So we'll take that. And when you look at those vertical markets, really great insights there. Let's now shift to the geographic look or stance. What about geographically? Do we see certain regions being stronger than others and others perhaps still struggling?
Sure. I think from a positive aspect, it's the same suspects. It's the South Atlantic region, which is essentially stretches from DC all the way down to and inclusive of Florida. Low cost of living overall, great demographic growth in general, and that will promote stronger gains in construction activity, especially as more remote work has moved along. A lot of folks have moved into that South Atlantic kind of much better climate, certainly than what I'm used to up here in New England. Texas, I think, also falls into that category. Low cost of living, very robust economy. And so Texas, I think, will be a driver of growth as well. On the flip side, I think for just about the opposite reasons would be California. High cost of living in California, and we're seeing, at least anecdotally, a lot of reports of companies moving out of the state of California for lower cost locales, Texas being the prime winner of that. As we spread north, I think that could spread north into the Pacific Northwest, particularly in a metropolitan area like Seattle, which has really been predicated on high-tech employment and high-tech growth. If remote work really kind of catches on and stays, that could certainly hurt an economy like Seattle.
Interesting. Great feedback. So thank you for that rundown from the South Atlantic, by the way. And when we look at Dodge Data and Analytics, every month we see that you folks publish a press release about some of the construction starts, many of them, large $100+ million projects, but there's literally hundreds of construction starts that you folks have your fingers on. Are there any noticeable trends happening that we haven't yet talked about that you think are notable?
Sure. Yeah. Great question. I think there are two that pop foremost into my mind. You just mentioned one in terms of high value projects. So a lot of the pre-pandemic expansion, so that would be from the Great Recession up through 2019, a lot of that expansion, especially in the commercial side of the market and multifamily as well, was predicated on high-end construction in major urban areas. So Chicago, New York, Miami, San Francisco, the list goes on and on there. What we've seen, though, over the past 2 years is from a demographic perspective, the pandemic has really pushed people away from those dense urban cores out to the suburbs and beyond, even out into rural regions. That has pulled that residential and commercial construction and some other non-residential construction out with it. So that's been an interesting trend. So we're seeing that suburban share of construction activity actually gain over the last 2 years relative to the urban share declining. So we'll be watching that to see if that continues. Now, to be sure, a lot of that demographic shift was happening before the pandemic as millennials aged. It just got turned up to 11 through the course of the pandemic. So we'll be seeing if that the trend, or at least the growth at that pace of growth, will continue. But regardless, the one thing that we've seen over the past couple of years in terms of that share of high value projects, as construction has moved away from the dense downtown cores, we've seen that the share of large projects, so those over $100 million or more, drop in favor of projects in the $25 to $100 million range. So more of the mid-level construction. So it looks like the sandbox, whether it's demographically, geographically, or project size, the sandbox seems to be getting a little bit bigger.
Wow, I really grateful for all the different pieces of information you share with us regarding all the uncertainty, the regions, the different vertical markets. Always learn a lot when we read the Dodge reports, but also just really got into some of the nitty gritty here. So thank you so much, Richard, for the keen insights. And thank you for joining us today for 5 Big Questions.
Happy to do it and hope we can do it again soon.
Hey there, we really enjoyed that discussion. We hope that you did as well. Be sure to click that big LED logo next to me. And what that'll do is subscribe you to our YouTube channel so you don't miss the next 5 Big Questions interview. And YouTube subscribers always receive an early preview to the next interview before we even post it on the Inside Lighting website. Thanks, and we'll see you next time.